Hi, this is Hyperwave. I'm thinking in Croatian. Bo, kako si? I am very excited that Croatia won yesterday. And yes, I am rooting for Brazil. And I'm a little too nervous, actually, to wear the jersey right now. So I will be honest about that. So we missed you guys yesterday. A lot is happening, not just in Bitcoin. Yes, we did see that it's up right now. It's very interesting. And of course, we're going to talk about that. But specifically also today, we're going to talk about Dow theory and what's going on in traditional markets, and especially international markets, because it is not looking very good. I also see myself on the YouTube, and I'm doing this a lot, which looks really funny, and I need to move that over. Okay, so with that said, I will turn it over to you, Ty.
Great, thank you, Leah. And we apologize again for breaking in just about the time the game is starting, but we are going to keep this very short, 30 minutes at the max. And only to set up a couple of other vlogs that we will do later. This is just an introduction because a number of things have started coming together in the markets worldwide that are concerning. I called it in our title, The Gathering Storm. And let me just explain what I mean by that. In meteorology, when conditions begin to change, there are signs of gathering storms. And what that basically means is there is the potential for a storm developing. It's very difficult to tell how big it will be or if it will even come to fruition as a storm, because things can dissipate very quickly. The density, barometric pressure can change fairly suddenly. A new front, cold or warm, can begin to develop, new lows, new highs. Temperatures can change. And that's what makes meteorology so difficult. But when the evidence begins to build that something is happening, that weather is about to happen, it's good to take note of it. And that's what we're talking about today in the markets, particularly the traditional markets. And I'm talking clear around the world in terms of equities. I'm talking about the bond market. I'm talking about the precious metals market, gold and silver. And we're going to just concentrate on two things today. One is the Dow Jones Industrials and the Dow Jones Transports, and also the Chinese market in Shanghai. But that all of this is just to set up two long vlogs that'll probably be an hour and a half or 2 hours long each. One on the Dow theory and what it is saying right now. We will go over that briefly today. But the second is what the potential of this trade war means and why China is reacting so poorly, but so far the United States isn't. And all of those things that I just talked about, also the fact that the precious metals have gone from bullish to neutral to bearish and have not yet developed into a full-fledged storm, but look very different than they did even 60 days ago. All of these things are interrelated, and they're very important, and they need consideration. But this is not a call for a lot of things to happen. This is simply an early warning. Now, I want to discuss Dow theory. And if you look back in our vlogs, you will find one. We will try to reference it later, that spends a lot of time talking about Charles Dow and Hamilton and Leah, who over a 30-year period, those three men, Charles Dow came up with the idea. Hamilton wrote a lot of editorials about it over the next 20 years, and Leah wrote a book summarizing it in the 1930s. And then a number of practitioners have spent a lot of time, I mean, half a century, every day writing about it. Richard Russell was the most prominent, and he spent well over 50 years publishing a daily newsletter about Dow theory, every one of which I have read, and I followed him very, very closely. But there's still a lot of confusion about what the Dow theory is. And I'm not going to explain it all here. It's actually one of the simplest concepts ever. But there are many, many interpretations of it in terms of should you be looking at weekly charts or monthly charts or daily charts, and how big of a drop must there be to give a Dow sell signal or a buy signal. I'm going to go over those things briefly, but you can Google them yourselves, and there's lots written on them. But about 3 months ago, a lot of people were saying that we have a Dow sell signal on the drop in both the Dow Jones Industrials and the Dow Transports. I did not interpret it that way at the time, but right now I am quite concerned that the Dow Jones Industrials and the Dow Jones Transports are telling us a story. You know that I believe that the NASDAQ and the NASDAQ 100 are telling a story. The S&P is somewhere in between those two. And I will try to explain that today with a couple of charts. But before I do that, let me once again reiterate what Charles Dow said about the market movements. He broke it down into primary, secondary, and tertiary movements. And that's the same thing as long trend, intermediate trend, and short-term trends. And he recognized a century ago that the only real important one was the long-term primary movement. But the secondary movement or intermediate term movement gave you a lot of evidence. The short-term daily pulses and moves that he called ripples are fairly meaningless for any decision making except very short-term speculation. Okay. Now, the mental picture or thought experiment that he did was to give us a metaphor for the movement of the markets. And the metaphor he used, as I've said before, is the tidal movement of the oceans. And anyone that lives near any of the oceans knows all about tides, but a lot of people don't really understand exactly what's going on. So what Charles Dow said is, if you simply go onto a beach and you're trying to determine where the high tide is, and he considered the high tide to be a bull market and the low tide to be a bear market. And the question is, how do you tell the difference between the two and when one begins and one ends? And he said, it's very simple. Just take a stick and walk out onto the beach. And as the tide is coming in and getting higher and higher, place the stick at the furthest point that the water rises to, and then just sit back and watch. And if the water goes past the stick, pick the stick up and put it back in the sand at the new point at which the tide has reached its high level. And keep doing that until the water does not reach the stick anymore and it begins going the other way. That is the end of the bull market and the beginning of a bear market, the end of a high tide and the beginning of a low tide. Now you can do the exact same thing with the low tide. As the water recedes, simply follow it out as it gets shallower and shallower, and the water.
Ty, we lost you for a sec. Okay, this is actually something I meant to do at the very beginning. Peter Russell made our cover photo, and which is also the banner page, and it is amazing, amazing. So his Twitter handle is I am so gonna blank on this, but I think it's World of Rusty. It is totally World of Rusty. I will tweet it out later. He's absolutely amazing. That's all I'm gonna say right now. Tyler, are you back on? No, you're not. Keep trying. Guys, what's the score for Brazil? Has it done anything yet? Ty, I'll let you know when you get back on. But right now, it's not. Yes, did you guys catch Croatia yesterday? So I went to IE Business School in Madrid, and that was 2012 to 2013, and that's when Modric like really became like a player who was like put on kind of at the end to like energize, and then became like an amazing. And so he totally screwed up, obviously, at the end, but then redeemed himself. And I'm a big fan of Modric, but also huge fan of Croatia. I am waiting to watch when Tyler goes back on. So sorry you guys have to deal with me right now. Yes, and I speak terrible Croatian. Ja govorite hrvatski slabo slabo. But huge fan of the country. But yes, I am absolutely rooting for Brazil. Sorry for the Mexicanos and Mexicanas that are watching us right now. But I've worn the jersey pretty much all weekend, so I don't think you guys want me to wear it anymore. I don't know where Ty is right now. So yes, Bitcoin, very interesting. I may even bring up the chart right now so you guys can study what's going on until we get Tyler back. We're also going to look at the bloodbath in Asian equities. If you guys know anything about my background, maybe not, it's that on Wall Street specifically, I traded Asian equities, followed Asian equities based on fundamental analysis. I know, sorry, Tyler and Tone, not TA, and macro trends. So we're actually going to look at, which is my favorite, the Shanghai Composite. Tyler, where are you? And then I'm totally going to make them bring up the topics later and other fun stuff, and hopefully the ASX and some other ones, and tie that into what is happening with international markets here at S&P. We're going to pull up NASDAQ. Yes, everybody's been asking about GBTC, obviously. And then, of course, we will talk about Bitcoin. We still don't have Tyler. If we don't have him in one more minute, I will shut this one off, and then we can bring another one back on. He also hasn't texted me, so I think he's trying. And yes, markets are very interesting. They're very interesting. If you guys did not see the show that Tyler and Tone did on Saturday evening, which was, yes, 3 hours long, it was fascinating, absolutely fascinating. Don't tell Tone and Tyler that I watched it really quickly and got a little bit of Spark Notes. But yes, no, I did get through the whole thing, and it was brilliant. They actually looked at everything live and talked about everything, and still don't have Tyler yet. So sorry, but let's see what you guys are saying. Should I shut this off? You guys bored of me yet? Bring up Bitcoin right now. Okay, cool. Let's do it. Let's do it. I think Tyler will figure this one out. Let's give him one more second. So actually, this is Dow Jones Industrials. Hold on, what are you guys? You making fun of me? Leah, my sound is still bad. Why? I don't know. I don't get it. Corey's been trying to teach me. All right, Ty, where are you? Let's see what's going on. Oh, I totally don't want Coinbase, obviously. I'm gonna do some TA together. Leah, you need more content. Yeah. Okay. You should be speaking. Yeah. But you should be speaking. You have all this. Oh, thank you. I appreciate that. All right. We don't have Tyler yet. So I think my TA is pretty terrible, but we can definitely do that. Maybe I'll make you guys converts of fundamental analysis a little bit. All right. Let's give him one more minute. And then I will start a new stream and have him come back in. What did Tyler say? Can you send me links? All right, guys, give me 1 second, okay? I am sending Tyler the links again. Why don't you guys tell me what, yeah, Tyler does it. Tell me what you guys see while I do this really quickly. This will be really interesting. Actually, what is sequential? All right, we have, actually, if I don't, Tom's gonna kill me. That's okay. He won't kill me too much. Okay, 1 second. Okay, Tyler has the link, so he is going to be jumping back on in a second, and I promise. Talk about Bitcoin, crypto, no equities. Okay, I can totally do that, but you know that actually our morning brief is coming on in right at noon, so we can catch all of everything. Bollinger Bands? Yeah, we can do that. So that's typically where I talk about crypto, but this definitely was a little bit of an interesting bounce. If we want to play, let's take off the weekly because that's what Tyler. Tyler, do we got you?
Yeah, hi.
Yay, okay. I'll keep on the weekly for everybody. No one wants to hear my TA. We have Bitcoin up, but I can put everything back up. Do you want me to put you back on screen, or you want to go into the charts?
No, let's just go into the charts. Let's start with the Dow Industrials.
Dow Industrials, okay. We got it.
Okay, as I was saying about the Dow theory, that's the way Charles Dow defined a bull market and a bear market. And in technical terms, what he said is when you've been in a bull market, the way you measure it is you keep putting a stick in the sand. In this case, you keep recording the higher highs that the prices go. And when you get a correction of more than 3%, which we have done on the chart you are now looking at, from a high, and then you hit a low, which we did in this case on a weekly basis, 2 weeks after the high, and then you go back up from that low, which we did when we bounced off of the long-term moving average the second week after that high, but you don't get back to the high, and then you go to a lower low, which we did by breaking that moving average. That is the first part of a Dow sell signal. Now, if you bring up the Dow Jones Transportation Index. Okay, here is the Dow Jones Transportation Index. And you see the same pattern. We hit a high. We came down more than 3%. We then went up again. And then we came down, and on a closing basis, we closed below that low candle that occurred 3 weeks after the peak, but just barely. And then we've gone up again, and now we're coming down again. So what Charles Dow said was that to tell if a true bear market has started from the reversal of a bull market, both the transports and the industrials must confirm. And the way he talked about it in terms of his metaphor is if you do the stick thing at one point of a beach, and then you walk another mile down the beach and do it again, that second measurement that you're taking is like the Dow transports. The first one is the Dow Industrials. Then you walk a mile away down the beach and you do it again. That's like the Dow transports. And to be sure that you have switched from a bull market to a bear market at both locations, you should see the same phenomenon taking place. And he interpreted that to mean the Dow Jones Industrials and the Dow Jones Transports both doing the same thing. People back in March and April, where the lows occurred, interpreted the chart you're now looking at, the Dow Transport chart, differently. And it looks different if you look on a daily basis or a weekly basis or a monthly basis. To me, that was not close enough of a confirmation in terms of new lows being established on the transports. And after other things occurred, I became bullish again. But the reason I'm saying that there's a gathering storm is how close the transports now are to actually breaking down below those two previous lows that you see at the February and the March-April period. That would, in my mind, be a Dow Jones sell signal or a Dow theory sell signal. And they don't always work out, but they have worked out sufficiently enough times over history to be very cautious when they occur. Now, Leah, if you could pull up the NASDAQ. Okay, this is the NASDAQ composite, and it is showing something different, very different than what we just saw in the Dow. Because in both the Dow Jones Industrials and the transports, you did not get this big leg up that went to new highs over the last 4 weeks. In fact, we're doing just the opposite. We are sitting on the lows on both the Dow Industrials and the Dow Transports. So the fact that the NASDAQ went to new highs gave me some optimism that because most of the strength in the market is coming from a handful, less than 10 stocks on the NASDAQ, but they are big enough that they're pulling all the other indexes with them. I was hoping that this big move up in the NASDAQ would be enough to pull the other indexes with it, but it has not done that. And now the NASDAQ itself is breaking down, going below the previous high, and moving averages are beginning to cross. And we've got really a 3-week series of lower highs each week. And we'll see what this week brings. But the other thing that I mentioned that bothers me about this chart is the broadening top concept. And I've gone back and I've looked at this very carefully, and it's too close to call, in my estimation, if we actually negated the broadening top with this last move up. If we had kept going another week and even another percentage point, I would be convinced that we had negated the broadening top. I have not come to that conclusion yet. And with what I've just said about the Dow and the Dow transports, this to me is a gathering storm. I am not concluding how it is going to end. If it's all going to reverse, everybody's going to bounce off of their 200-day moving averages or longer term moving averages and then continue up, very possible. And in my estimation, it's probable that that will happen, that we will actually hold on and go up from here. But there's some other things going on that are beginning to make me nervous. And if you can pull up a chart of the Shanghai, folks, this is not a good chart. I don't need to go into the details of why it's not a good chart, but you can all see that it is not, that this is a bear market, not only.
Wow, Tyler, we actually lost you again. So while Tyler gets this up, and then maybe we can end it for now. Just a background, actually. Yeah, the transportation is really, really interesting. Tyler, I'll let you know as soon as we can hear you. So right, like back in the Gilded Age of America, like railroads were king. And so as Tyler said, like the Dow Jones transportation was actually before the Dow created that, even before Dow Jones Industrials. I'm watching Tyler right now as well. But it's fascinating for tracking, and people don't often monitor it. And back then, my understanding is that it tracked 9 railroads, and then 2 actually were not. Actually, so I'm still watching for Tyler. So yeah, but that's because right back then, like especially like economic fortunes of Standard Oil and other commodity trusts, like everything was like super, super fascinating and important. Why are we watching Shanghai? Tyler?
How's that?
You got it.
Okay, I'm becoming a Luddite very quickly. You all know how I feel about the ecosystem of the crypto markets, that I'm just pretty much disgusted with how difficult the technical situation is with the crypto markets. And I'm quickly getting that way with all technology. It's just, after 30 or 40 years of building all this stuff, these kind of interruptions that Tone gets and that I get and that is just inexcusable. So programmers out there, please. Okay, so the Shanghai Composite is not the only way of measuring China, but it is one way. We will look in another show about the Asian market specifically. But this is the second largest economy in the world, and leads me to believe that all of this trade talk is beginning to damage worldwide confidence in the financial systems. That's an overstatement. It is hyperbole, but it is another piece of evidence of the potential of a gathering storm. And we will bring up a number of other markets that look not as bad as the one you are now looking at, but are breaking down. And when that process begins, in the US, it was the Dow Jones Industrials, then the Dow Jones Transports. If you could just pull up the S&P one more time, or one time. This is a chart that is between the Dow Industrials and Transports and the NASDAQ. Between meaning the price action also is negative, but has not really broken down the way the industrials or the transports, but never went to new highs like the NASDAQ. So I would rate the strength of the US large cap markets basically as NASDAQ number 1, S&P number 2, Dow Jones Industrials and Transports number 3 and 4. But that movement away from all of them being strong together is very clear to me. So on the basis of what I am seeing, I am taking more defensive positions for my fiduciary clients by raising cash and not simply sector rotating. I will be doing that this week, but I do things on a weekly basis, so I'm going to watch this very carefully. But if the S&P significantly breaks these two moving averages it's sitting on right now, that to me will be a clear sign, even interweek, that weakness is developing and the storm clouds are getting blacker, and the height of those clouds, called cumulonimbus clouds, are getting higher and higher, which becomes more and more dangerous. So what we're basically saying today is, in traditional markets, there is cause for concern and very close scrutiny of where you are and what you're thinking and what you're doing. Now, this is just an appetizer. We will get to the main course and the dessert in some much more in-depth vlogs, but I wanted to bring this up. Now, what I want to do is, Leah, if you could go off screen share, I'm going to pull up a couple of Bitcoin charts, because Bitcoin began doing something about 45 minutes ago. And I think it is interesting and maybe important. Okay, let's see how I want to do this. I am going to try something else here. I'm going to do this and this.
I'll let you, you're in the full screen. Just send me.
Okay, how's that?
Perfect.
Okay, great. You see the big spike that we've had in the last couple of hours. Let me bring it down to a 30-minute. This is a 30-minute chart. Almost all the activity took place on a 130-minute candle an hour ago. But this is the type of thing that we have seen over and over again with these pulses. I was assuming that this pulse up from 5,700 up to 6,300 was the end of that pulse, and then we would go sideways, which we have now done for almost 2 days. But I still am holding a negative on my short term until I saw this last candle. I was not anticipating that pulse to the upside. I believe it is not going to go anywhere. But Tone the other night on our 3-hour marathon had mentioned, and he did again yesterday, that he sees that this could be setting up for a move up to the 7,000 level. I did not agree with that until I saw this 30-minute move that just took place, because that is an additional pulse now in the direction opposite the way I thought it was going to break. So I am on air changing from my negative short-term stance back to neutral. I doubt that we're going to get up to the 7,000, but I need to be prepared on a short-term target basis that could occur with more evidence. And that evidence will occur as we build out of this pulse to the side. So for now, I believe that the best place to be is neutral short-term, negative intermediate term, and negative long-term. To go over why I'm saying that, let's just quickly look at the long-term. There's your stop and reverse points. the last point that needs to be taken out to reverse this is now at 7,500. It's coming down rapidly, but it is still in a bear market. And until that 7,500 level is breached, even interweek, because the SAR disappears not on a weekly basis, but on an interweek basis if it's penetrated, I will consider this to be fully bearish, just as it has been all the way for the past 6 months without interruption. Let's take a look at the moving averages. Again, we're getting an acceleration down in the important one, which is the long term. And that will start dropping quickly, but it's still up around 9,500. And the best that the bulls can look forward to is a move up to that line before turning lower. I don't think it can get up to that line. I don't think it can get much above where the intermediate term moving average is. And on this chart, that would be the 7 week, which is about, I would say 250 points higher than we are right now. The short term is moving up, the 2 week moving average, but it is not even strong enough yet to get back to the intermediate. So I consider this to be fully bearish in terms of what I'm looking at in terms of the intermediate and long term. The Bollinger Bands I've talked about over and over again. We still have not broken down through that bottom band. And now we're moving up away from it, which to me simply is going to make it more difficult and will cause more pain to get down to it. That lower band is now coming in around the 5,300 level, which is one of the reasons my short-term target was 5,300. And if we begin to fade on a short-term basis out of this last pop, that will again be my short-term target down at 5,300. I'm not going to raise that simply because we've gone up to 6,600, even though that's a lot greater than a 5% target. The other thing to look at is where the mid band is. It's up around 8,100. And again, I don't see any technical reason to believe that we can get even back up to that band as we did here when that band was up at 10,000. We've now come down 2,000, but I see no evidence that we can get back up there. And then all I am going to do is look at the MACDs, and on a weekly basis, this move doesn't do anything to it. On the RSIs, there's bad news, not good news. We never made it oversold, and we are now back up over 40. In fact, we're at 44. So all we've done is reset the probability that the RSI is going to roll over and become oversold below 30. But now we have to drop from 44 instead of where we were, which would have been much easier if we had just kept on going down. And I haven't heard Tone's take on this yet, but I know that the fact that this is taking longer to get where we need to go is not a good sign, because that means it's going to just take many more weeks and months to finally get into a capitulation or an oversold position. And with that, I am going to turn it back over to Leah, and so that she and others can go watch the game.
Thank you, everybody. And again, huge thank you to Peter Russell, Handle, World, Rusty. He is absolutely amazing. And yes, everybody enjoy the game, and thank you so much for watching. Bye.
Great. Thank you very much. We will set up at least 2 and maybe 3 in-depth looks at the traditional markets here this week. So thank you very much.